Google just keeps breaking records quarter after quarter. In today's video, we'll go over all of the hype surrounding Google's most recent earnings report, discuss Google's insane 20-for-1 stock split, and speculate on why the stock split might have been done for ulterior motives. But first, if this is your first visit to our Smart Stocks Academy channel, please accept my warmest greetings. Hit the like button, subscribe, and click the notification bell next to it. Be the first to know when a new video like this is produced. So if you're ready, let's get to the video.
Chatted about that 20-for-1 stock split. She said that she was hearing feedback that stock should be more accessible to investors, so that's what they did. Even with the rise of fractional trading, she said it's incrementally helpful for some investors. She said that the key driver was lapping a very strong result in Q4 of last year.
Google surpassed its quarterly earnings estimates, pulling in $3 billion more than the $75 billion predicted. Google made $258 billion in revenue in the previous fiscal year. This is a 41% year-over-year rise, primarily due to Google search ads, which brought in $150 billion, but they also have a few other moneymakers, such as YouTube ads, cloud services, and of course, selling ads on third-party websites. Owning Google is similar to owning a digital real estate. It is its own ETF on the internet. As an investor, it is exciting to observe that this trend line continues to rise tremendously. It is as if they found a way to outdo a previous year every year. They were bringing in roughly $100 to $110 billion a year just 5 years ago, and now they're bringing in nearly $260 billion, easily doubling for such a massive firm. Companies would kill for these kinds of outcomes, yet Google makes it appear so simple. Its gross profit and operating income have been steadily increasing over the years, reaching $146 billion in gross profit and $79 billion in operating income this year. After deducting its cost of goods sold, this is the amount of money Google gets to keep. This gives us a staggering gross margins of nearly 60%. It merely goes to illustrate how successful Google's business model is. What else are we going to do with it? Bing? Well, this year's cash flow has more than $90 billion US dollars. This indicates that the corporation has no trouble bringing in funds into its operations and is just continuing to expand. This is why we see that Google has a cash pile of $140 billion. We know that there are limitless possibilities for what they may accomplish with it. In 2021, Google purchased back $50 billion of its own stock. And they had the financial means to do so, after all. Google is also putting money into its own workforce. They hired approximately 6,500 workers in the last quarter, largely for technical positions. Google also has the low-key benefit of being able to attract the smartest and brightest talents because everyone wants to work with them. Other things Google could do with all of this extra cash include investing more in their existing segments, such as the Pixel smartphones, continuing to work on their cloud computing business, Google's autonomous cars, which will be undoubtedly revolutionizing the industry in a few years, or follow in the footsteps of Microsoft and simply buying an existing company to continue growing its business. And yeah, I am well aware as of now, Google does not pay a dividend, but I do believe they will sooner than later eventually start paying one. I also believe Congress will eventually split up huge tech businesses, and I believe that paying a dividend and not sitting on large cash piles like Google does now can help offset some of that risk. Google is a $1.8 trillion firm, and I don't see it slowing down anytime soon. But one thing that will be coming down is the share price when Google officially announces a 20-for-1 stock split. I believe many of us anticipated this. Obviously, there are no major changes to Google. The stock split will have little to no effect on their overall financials, but I believe we can all accept that it is far cooler to claim your own 25 Google shares rather than 1.34985. We'll never be able to comprehend the human brain's irrational decision making. Other corporations have experienced run-ups following announced stock splits in the past, and we have seen it before. Apple and Tesla, to name a few, are examples of this. The stock split isn't slated to occur until mid-July, so we still have some time until it takes effect. But I wanted to highlight two areas where the stock split would have a significant influence. Options trading would be the first. If you wanted to do this with Google's current prices, good luck with that, because you'd need approximately $300,000 on hand. After the share split, an investor might be able to do options trading with Google for roughly $15,000 to $16,000. For the typical investor, this is a lot more feasible. I am actually extremely excited for this because tech businesses frequently pay decent premiums, but I believe the real reason Google opted to perform the stock split was so that they could be listed on the Dow Jones 30. This is one of the most closely watched indexes in the world, and it is made up of blue-chip businesses. It is used to obtain a general sense of how the market is performing. As a result, the Dow is calculated differently from other market indices. They are based on the share price rather than the market capitalization, which practically even other index is based on. And as a result, companies with greater share prices have a larger weight within the index. This is precisely why Amazon and Google have never been included in the Dow. They would just have too great of an impact on the day-to-day changes due to their enormous share prices. Personally, I feel Intel will be phased out to make way for Google, but some in the market say it could be IBM. Being added to the Dow would be a tremendous boost for a company because many ETFs and mutual funds just acquire companies in the Dow on a passive basis. That will almost probably result in a rise in the stock price. So in general, I am a huge supporter of the stock split. Google has had another fantastic year. I would never buy a firm solely because of a stock split, but I believe Google has a bright future ahead of it. So if you agree with me, please let me know in the comments. And with that, today's video comes to an end. If you haven't already, hit the like button to show your love and support for the video. Also, don't forget to subscribe to the channel and turn on the notification bell next to it to be the first to know when a new video is posted. Thank you for stopping by to watch, and we hope you had a great time. We hope to see you again.